Sometimes this live cattle market is referred to as the fat cattle market. Well, we had a little bit of a surfacing of asking prices, maybe around 105 to 107 for this new show list so far here today. October live cattle up, make that down 17 cents at 106.70. The December's down 60 cents a hundredweight at 111.10. And Brian Hoops with Midwest Market Solutions here with us. What do you think of this lower trend here this morning so far, Brian?
Yeah, John, good morning. Feels like a little turnaround Tuesday in the cattle market. Can't make much of it, I don't think. The futures are trying to dial in some higher cash trade as we had strong futures rally on Thursday, Friday of last week. Again on Monday, triple-digit gains. So the market's really pricing in at least a $1 to $2 higher market already this week. It's going to be hard to sustain that, I think, as we go forward with lower box beef values and increasing steer carcass weights.
Yeah, I'm glad that you bring up those fundamentals because there's been a lot of folks talking about how strong those fundamentals may be. Over on the feeder cattle market, though, you got to wonder if this market isn't watching what could be going on in the corn market, because October feeders are up 50 cents at 143.10. November up 12. Sometimes we see this, the live cattle and the feeder cattle kind of trend the same direction, but today it's going opposite directions. Is that related to corn?
Yeah, I think it has to be. The corn market's struggling around 370 resistance. Producers are looking at that price level and laying off some of their risks. That's a 45 to 50 cent better price than what we saw about a month ago. And they are going to start a rapid harvest pace here in just a couple of days. A lot of clients telling us across the Midwest we're going to see a lot of harvesting going on, and that is going to put some pressure against the corn market. That should increase the value of some feeder cattle, but this is not a strong seasonal time frame for feeder cattle. Usually we see weakness going into the winter months. So rallies, I think, in here will be sold by the feedlots and the producers out there that need to get some hedges in place.
All right, but let's switch gears now and talk about the hog complex. It's October up 172 at 66.35, December up 30, and February up 12. Notice here, Brian, the further out you get in those deferred contracts, the less gain we have.
Yeah, they already have a nice premium built into the market. October and December, trading in the low 60s. That's well above what we were just 3-4 months ago. But you look at some of those deferred contracts; they already have a big premium built into it. There's already enough incentive out there to keep the feeders from filling up and keeping our pipelines full of hogs. It's these front months that need to gain and need to really narrow some of that spread, and that's what we're seeing: a lot of short covering and unwinding of those spreads. So we're seeing some buying in the front months, selling in the deferred contracts.
So you think we're done with 70s on these front months here for a while?
Yeah, I think if we get close to 70, there will be a lot of hedging starting to take place in those hogs, just like we saw in corn at the 370 a bushel mark, just as we saw in November beans when they hit $10. Those are some attractive hedging price levels for the farmer out there, and they're going to take advantage of these, I believe.
That's a good point, Brian. Well, thank you very much. We'll talk to you again very soon. Mr. Hoops is with Midwest Market Solutions. Back to you, Christina.